Well, now I want to show you, a few examples like here for us to look at together. The first example you see is the price chart of the Iran Transfer Company stock. You can see that over a significant period, the stock's price chart has had an upward trend in the market. This example is entirely real, taken directly from the software. To show you how an upward trend has formed in the stock's price chart, reaching a point where a shoulder on the left, a shoulder on the right, and a larger head have been created here. Just a note, dear friends, that you need to pay attention to, and an important point about price patterns is that the schematic representation we see is a general overview. In the real market, you are not necessarily going to see subwaves of the same size. You need to have that overall pattern framework in your mind. Well, look, right here, the left shoulder and the right shoulder that have formed are generally close to each other and similar. And you don't need to, for example, put a ruler here or level it here to see exactly how this is happening and whether they are exactly the same size or not. No, you need to keep a general schematic view of the chart in your mind. Here, as you can see, the left and right shoulders have formed and the head is in the middle. Next, the place where the valleys have formed is actually the geometric line where we connect them. The blue line is our neckline, price pattern, and where this neckline intersects the next peak, the last peak, or the right shoulder. At this point, you will witness the chart. You will witness the breakout point. The breakout point is our point of break. In this area, the breakout point is created, and with this breakout point that you observe, let me actually bring my pen so I can explain it to you using it. Look at this breakout point. I am exactly witnessing the drop in the stock's price chart at this point. But how much? The amount that I am supposed to have at least a drop is this much. That is equivalent to this amount from the neckline to the head. From this point, I should witness the drop in the stock's price chart. Well, as you can see, this term atlas also appears here. That is, the chart has dropped at least by this amount, and we have even witnessed much larger drops in this area, and the chart has actually followed its downward trend. Well, if you had observed this pattern up here, you could have quickly protected yourself from this risk or significant loss that you might have incurred, and you could have sold your shares at a very good point, thus finding better conditions for investment. Well, let me clear this part and let's look at another example together to see how well the price patterns are working for us and how you can use these patterns. The next example you see is the Vesna chart. Vesna had an upward trend up to a point where the chart rose and exactly a head and shoulders pattern formed with a left shoulder, a right shoulder, and a head at the top. After that, to the extent that the stock actually grew, and to the extent of that growth, we observed a drop in the stock's price chart from the breakout point. Well, let's look at another example together here. The next example you see is actually the Sharuk chart. Sharuk had an upward ascending trend, and in this area, you can exactly see a left shoulder, a right shoulder, and a head. Let me point out something to you. In general, the head and shoulders chart has a neckline with a horizontal line. However, in some industries, companies, and depending on the macroeconomic conditions of the stock market in some countries, the head and shoulders chart can have a neckline with an ascending line which actually arises due to a series of macroeconomic conditions. But keep in mind that we never have a price chart of a stock that actually has a head and shoulders pattern with a descending neckline. That means you cannot experience such a thing. Look here now. Here we observe that the price chart of the stock has created a space that forms a head and shoulders pattern. And in this pattern, we see the left peak, the head, and the right peak with an ascending neckline created. And at this point, we witness the breakout point. At this breakout point that is created here, we should expect the stock to fall by the same distance that exists in this area. And this decline has also occurred here in the stock. All right, let's look at the next example together in the next slide. Let me clear this part as well. Very good. Yeah, look. Dear friends, as I explained before, we have a head and shoulders pattern with an ascending neckline, but we do not have a head and shoulders pattern with a descending neckline. So wherever you feel there is a head and shoulders pattern, but its neckline is descending, consider it as not considering it as a pattern. The next chart that you actually see is the chart of the Power Plant Project Management Company. A significant upward trend. The head and shoulders pattern that has formed here, and after that, from the breakout point that we actually observe here, we should expect the stock to fall. Considering the distance that the neckline has from the head in this pattern, the chart will be prone to decline for quite some time. Well, the next example that you observe is the chart of the FAR stock. A significant upward trend has formed in the stock's price chart. We have reached an area where you can see the head and shoulders pattern here, but as you can observe, Daraddanans, the left shoulder bit is actually much larger than the right shoulder in Nomens, and to some extent, the left shoulder then is almost the size of the head that has formed here. In other words, we have a pattern that we don't see with its full schematic representation, and there are some flaws in the schematic representation of our pattern. Therefore, pay attention to this point, that the closer the schematic representation and the pattern's harmonology are to the schematic representation we explained to you, the more you can trust that pattern. And the less this schematic representation is close to the main schematic representation, the target that is supposed to be given to us will be weaker. Therefore, I brought this example to show you that sometimes the pattern is not created with its full schematic representation, and you might not see the target you have in mind. Now, we can also look at another example. See, if you look at our next slide in this area, you can see the chart of Saipa Company stock with the symbol Kasapa. An upward trend in the chart has emerged. The left shoulder of the head, which has been significantly formed, and the right shoulder. Our neckline is aligned with a positive slope, and from the breakout point in this area, we should expect the price chart of the stock to drop at least to this extent, and this drop has also occurred significantly for this area. Well, let's see if we have another example or not. Then we can move on to the next section. Well, we have seen examples of the head and shoulders pattern together. Now we want to examine the second how reversal pattern in technical analysis together. The next pattern is the inverted head and shoulders pattern, which is one of the second reversal patterns in technical analysis. Well, in the next slide, we will see the schematic representation of this pattern. The inverted head and shoulders pattern is a pattern that is exactly similar to the head and shoulders pattern in terms of schematic representation, with the difference that the trend before the formation of the pattern is a downward trend. That is, when the trend turns downward in a downward trend, we actually have a left shoulder. On the right side, we have a right shoulder, and in the middle, a head is formed for us. The head that is formed here is completely the opposite of the head and shoulders pattern, as if the head and shoulders pattern is reflected on water, actually symmetrical and inverted. Here in this area, from the joining of the patterns, or rather the left and right shoulders, two peaks are formed here. See, these two peaks that are formed here from the geometric joining of the lines of the points of this peak actually create a line that we call the neckline. And when the pattern is complete, kids, when the neckline cuts through the right shoulder. The neckline cuts through the right shoulder. See, in this area, the right shoulder hasn't been cut. In this area, the chart is touching. It hasn't cut through the right shoulder, but at this point, it has. It has come from the bottom to the top. At this point, it has cut through the blue line. So this point is actually my breakout point. We can call this point our E breakout point. And this point is important for us. It's a point where we need to make sure that this inverse head and shoulders pattern has formed, is complete, and now it should show me its target. Well, I have drawn this pattern. Now I actually want to see the target of this pattern. If we look at the next slide together, okay, let's go back. This goes on my example. In this section, I will tell you its target exactly from the breakout area, meaning from this point, we measure the distance from the neckline to the head. In the head and shoulders pattern, our head was a peak. Here, our head is a valley. And from the breakout point, we observe an increase in the stock's price chart. So, in fact, just as the head and shoulders pattern was a pattern that gave us an exit signal, indicating that the stock was going to drop from then on, advising us to be cautious and exit quickly. Here it gives us an entry signal. This means that when I see a downtrend and an inverse head and shoulders pattern, I should take action to buy that stock from the breakout point. Why? Because at least by the distance between the neckline and our valley, we will witness the growth of the stock's price chart from this point. Well, with these high conditions that you actually observed, we can analyze and examine the trends of the charts. Now here, as the first example, you are looking at the overall index chart. This software environment, which we will get to know later and start working with, has a very user-friendly, good and excellent interface. For now, we are only looking at the examples through the O images. Look, this is the overall index chart of the Iranian stock market. The overall stock market index has actually taken on a downward trend to the point where it has formed a left shoulder, a head, and a right shoulder. Pay attention, dear friends. In some of the previous examples, I mentioned that we have a head and shoulders pattern with a horizontal neckline, and we can also have a head and shoulders pattern with an ascending neckline. However, we never have a head and shoulders pattern with a descending neckline. In the inverse head and shoulders pattern, this is completely the opposite. That is, we can have a head and shoulders pattern. Firstly, the inverse head and shoulders pattern always has a horizontal line. But we can also have a head and shoulders pattern with a descending neckline. However, we never have an inverse head and shoulders pattern with an ascending neckline. Please pay attention. Now here, I have a head and shoulders pattern. The neckline is also a descending line. So this can be an inverse head and shoulders pattern. In this inverse head and shoulders pattern, the neckline has also intersected the right shoulder at one point. It has intersected at this point. See? Now here I can consider this point as an important breakout point and say that my breakout point is actually this point, and from this point I should witness an increase in the overall stock index. Has this happened? We say yes, this was our target. The peak, in fact, was the measure of our head. From the neckline point, I should witness at least this much increase from this point. Has this increase occurred? Yes, it has happened much more. So see how well you can make important decisions on the stock price chart by knowing these two patterns, head and shoulders, and inverted head and shoulders. All right, let's go to the next slide and see the next example together. In this example, you can see the chart of the company Mabna, a downward trend that has occurred from this area, and the chart has gradually declined. And in this area, we can see the left shoulder, the head, and the right shoulder. Well, naturally, it has created a neckline for me in this way, and from this point, it's my breakout point, and I should see at least this much growth in the stock price chart. Well, pay attention right here. See, in this pattern, firstly, the left shoulder and the right shoulder are not very equal. They are not very similar in size either, or the formation of this valley, or in fact the head that we have considered for this pattern has taken a long time, and this makes the target we have in mind less likely to occur. So the closer your head and shoulders pattern or inverse head and shoulders pattern is to the schematic representation we drew, and the more it resembles that schematic representation, the better the target you have in mind will be. Well, from here we should see the chart grow by this amount from this area. That means it should grow by approximately this amount. Note this, guys. It's not always the case that immediately after the breakout point, the stock will start to grow significantly. Always remember, we also mentioned this in the history of technical analysis discussion. We said that you need to give the stock time to reach the target you want. You shouldn't be too hasty in terms of time to gain profit from the stock. When you buy the stock at this point, say to yourself that I will have at least such a target. Therefore, I need to wait in this area until I reach my target, then exit the stock. What will happen to me? Nothing. I am investing my money. So I must wait with that investment to reach the target I want to achieve. I shouldn't be hasty in reaching my target. The analyses tell us that the stock will reach that target. In what time frame? In the time frame where you need to wait to reach it. Now, in patterns, and actually in more advanced tools and strategies, we can also measure time. But for now, then, these patterns or price patterns are called price patterns. They are price patterns. They give you the target for the price. For the time target, you use other patterns. All right, let's look at another example together. Well, in the next slide, you can see the chart of Madaran's shares. Madaran Company is following a downward trend, which can be said to have a sinusoidal fluctuation. This fluctuation hasn't really taken on a downward form, and the trend before the pattern formation is almost neutral, and the chart doesn't have much of a trend. Let me mention an important point here, dear ones. Price patterns always emerge when the chart is half trend before the respective price pattern. We have previously talked about trends, according to the ideal theory, never come in a neutral state. In fact, examine a schematic representation. If there was no trend, for the stock's price chart before the formation of the pattern, and the chart was neutral, that pattern will not actually be a price pattern. Well, here we are considering a downward trend for the chart. From this area, my downward trend has reached a point where I observe a left shoulder, a head, and a right shoulder. For the chart, this is exactly an inverted head and shoulders pattern, and from the breakout point where the neckline actually cuts through the right shoulder, I have a very good and strong entry signal that I should act upon. Well, the chart is showing me a price pattern. At least we will witness the chart's growth from this area to this extent from the breakout point, indicating the price chart's growth of the stock. But what is this growth always, guys? You really need to pay attention to it. It always grows at least to this extent. It means it might grow even more. So I see that the chart has taken on an even better upward trend. So you see how well this pattern is showing its schematic representation. Well, let's see if we have another example. If we had an example, we see it. If not, yes, we do have another example. The chart is for the company leasing Ryan Saipa Buwisa with the symbol Velsapa, which shows a downward trend followed by a left shoulder, head, and right shoulder. From this point, we should witness an upward trend in the chart, which you can see has occurred. Let me give an explanation about this example. It's very important, and please pay attention to it. There are places where you don't see the chart, and it seems like there is no chart. The chart is not visible from this area to that area, and then it becomes visible from here. Be aware that there are days in the market when the shares are closed. for various reasons, such as the company wanting to increase capital or make adjustments, or something happens in the company that causes its shares to be closed due to various announcements or disclosures it makes. According to stock exchange regulations, the company's shares must be closed on that day. No transactions should occur until the news is published, the issue is addressed, and the capital increase or whatever it is gets implemented by the company. After that, the shares re-enter new market transactions. Here, when you see the chart interrupted on this software and do not observe a chart, it is on those days when the company is actually inactive. And suddenly, after being closed, you see its price opens much higher than the previous price. Therefore, when you do not see a chart, it does not mean that the chart has not grown or declined. It means that during that time period, the stock was closed, which we will discuss more about later on in the software. Well, let's see if we have more examples. Well, our next example is also finished. We enter the discussion of the third reversal pattern in technical analysis in the capital market, which is the double top pattern or the twin peak pattern. The double top pattern or the twin peak pattern, the third reversal pattern in technical analysis, which we will see a schematic representation of in the next slide. Well, as you can see, the twin peak pattern has formed here. We have exactly two peaks of the same size here, with a valley formed between them. A line is drawn horizontally from this valley. The neckline is actually the schematic representation of our double top. Look at this neckline. Kids, pay attention to this neckline. It intersects the slope of the second peak at this point. This point is our famous breakout point. And it's the point that when created, when the price chart reaches this point, the pattern with its schematic representation is fully completed. And when the pattern is completed, we must take the target of this pattern. Now, what is the target of this pattern? According to this line that I have drawn here, meaning the HH premium area that I have at this point, from the breakout point to this extent, we are witnessing at least a minimum drop in our stock's price chart. This means our price target in this area will be at least this much. This is actually the schematic representation of the double top pattern and its price target, which we will see in the next slides, with a few examples of this schematic view. Well, if you look at the next slide, well, in this slide, we see the first example of the double top pattern together. We have a price chart that has an upward trend, and then it has come to an area where it has formed a peak, and then this peak has been repeated again. And a very important point in this example, friends, which you should pay close attention to. Here we have a peak and an exactly equal peak following it. After the peak, the second peak of the chart has come. If I want to see this as a double top, I would say, okay, at this point where I am present, I will bring my pen. Well, look, dear friends, at this exact point where I am, it might be a breakout point for me. Maybe. Why did I say maybe? Because as I previously mentioned to you, I can fully identify a pattern when see this line that has formed here. This point is a horizontal line I have drawn. In fact, I have drawn my neckline here. This is my neckline. Now, here is when I can consider this point as the breakout point, provided that the three essential conditions for a breakout point are met. That is, the chart must definitely break this line and come down for me to consider it as a breakout point. We have a rule that we call the 3% rule. What does the 3% rule tell me? The 3% rule tells me that when I can consider this point as a breakout point, 1. The same rules of the breakout point, the chart must break this line and move at least 3% away from this line. When it moves 3% away from this line, I consider this point as a breakout point, or in other words, the completion of the price pattern. Well, now here, my first peak is here. The second peak has been created. Up to these areas where the chart has moved forward, I say, well, very good. I have a double top, but the double top pattern is not yet completed. And this pattern is completed when it breaks this line with all its geometric representation. So when the chart has come here and just touched my line, my pattern is still not complete. This pattern has gone up again, and the chart has gone up again, has come down. But in this area, a break has occurred. So my main breakout point is this point, and I can consider this point as my breaking point. Now, what pattern did we have before? If this peak, which is smaller, was the size of these peaks, it could be another schematic representation that we will get to know. But here we only have the schematic representation of a double top. Well, look at our peaks that are equal. We should see a price chart drop by the size of this area. From the breakout point, at least you should see a price chart decline of the stock. So at a minimum, this amount of the chart can drop, and you see that it could be much more than this. The price chart of the stock has experienced a significant drop. This example was a very interesting one where we actually see the formation of the breakout point. Well, let's look at another example together.